Bitcoin on exchanges has been drying up at record pace. When you take a look at all of the exchanges, there hasn't been this little Bitcoin on all exchanges in the past 5 years. And when we take a look at price, there was a massive outlier for miner inflows into exchanges recently, signaling there could be some massive price volatility coming. And when we take a look at Bitcoin's chart, it looks like we could validate this thesis with some of the price action that could be coming when we take a deeper dive into this, when we drop down into the daily, the 4-hour, and the hourly later in this video. But as we take a step back and look out and zoom out to all prior bear markets, assuming that November 2022 is the cycle floor, we can see that the depth of the bull market correction thus far. In 2023, the peak drawdown has only been 18%, which is very impressive because it's very shallow compared to all the other bear markets, and this is indicating that there is relatively strong demand for Bitcoin, which is coming from a lot of these institutional players. So the way I wanted to start off this video is to look at the Bitcoin chart first, because I think there's some important price action that could be coming in the coming week or coming weeks, especially with some of the exchange inflows coming from these miners. So the first thing is that on the weekly, it looks like for the past 2 weeks, we had basically no momentum in terms of price. We had dojis back to the upside and the downside. And that's basically just telling us that we have momentum just stalling at the $31,000 price range, which we're currently at right now. Now, obviously, this week opened up. We still have 5 days and 7 hours to go until this one closes. But as we drop down to lower time frames, we kind of get a better picture of what might be happening. So obviously, we know we're in this range from 31,000 to 29.5. And this is a very important range as we drop down to lower time frames. But as you can see, it seems like the weakness is actually coming to the upside as we had massive wicks to the upside basically fail. You can see that right here. Price at one point was a massive green candle, and a lot of the sellers push price back to the downside. Now, when we drop down to the 4-hour time frame, you can see that we're stuck in this range from 31.5 to 29.5, basically a $2,000 range. And for Bitcoin, you can see that a lot of these candles are showing that there's really no volume happening in the markets. Nothing has really been happening. And then right here, we had some decent price action where we went to the upside and immediately back to the downside. So what we are seeing, and what I personally think is going to happen, is I think we have to take out these lows at 29.5. When you look at the macro, we still have some price movement that we can go to the downside. As you look over here, we still have a lot of unfilled price action right around this point. So I think in the macro or the larger time frames, going back down to 29.5 or lower is very likely. But on the hourly and the short-term time frames, we have to set up in order to get there. And that's why when we look on the hourly, it's very important to understand what's going on. As you can see right over here, what we're really doing is kind of setting up a floor. If I change this to, let's say, red to show stop losses and potential liquidity right down here, you can see that there's a lot of support being held at right here. And it seems like we're kind of making an inner range high right above here. So I wouldn't be surprised if what we start to see is ceilings or resistance start to get formed right around here, and then price eventually does something like this where it kind of captures liquidity, pops up, and then that's when we come down and take out our range lows at 29.5. Obviously, you need to build up liquidity in order to move the markets because not everyone can make money in these markets. And to kind of coincide with this idea, we can take a look at recent exchange data from miners. So we just had a massive amount of volume come from miners putting it into exchanges. And when we look at the exchanges that they're transferring it to, it was actually just Binance. So Binance received all of these Bitcoin, I think totaling up to like $2.3 billion in today's market value. And this comes for a few reasons. It could either be that the exchange that or the miners who are putting all their Bitcoin towards this exchange, they're either taking profits because obviously Bitcoin has been rising recently. Another thing is that they could be covering their expenses, right? We don't know what their situation is at this point. But what I think might be happening is that there could be market speculation. Obviously, in the short term, they could put a lot of their money back into USD and they could go back on the derivatives market and trade potential breakouts and setups in order to kind of like make themselves a little bit more profitable. And so if the miners or the people who are in charge of this think that something like this could happen, or there's price volatility coming into the markets, they could be transferring their Bitcoin into USD to take advantage of these short-term setups and market speculation. But to shift away from the short-term time frame in Bitcoin's price, if we take a look at exchanges and how much Bitcoin is actually left on the exchanges, it's actually insane how fast a lot of this Bitcoin is drying up on the exchanges. You can see right over here at the end of 2020, we had a lot of Bitcoin, close to 1 million Bitcoin just on Coinbase alone. And in over the past year or two, you can see that has dropped to basically 500,000. So 50% of the Bitcoin has left Coinbase alone. And just taking a look at all of the exchanges, you could see that we're at 5-year lows. I mean, the last time we were this low was here back in the late 2017, right around here at this bull market. Obviously, people were probably taking a lot of profit around here. But when we're looking at this, it seems like the time that we're in, especially with the institutional investors getting into the markets, it doesn't seem like this is going to be a trend where we continue to fall and then spike back to the upside. It seems like what we're going to see is that people are becoming more educated on Bitcoin. And so they're going to be taking their Bitcoin off exchanges, because if it's not your keys, it's not your crypto or your Bitcoin. And so I think we're going to see a continual trend where we see Bitcoin falling from exchanges, which is going to be very important because Bitcoin right now is an illiquid asset. There's over 70% of the Bitcoin supply that hasn't moved in over a year. And so with this little amount of Bitcoin on exchanges, it's going to be very expensive in order to buy and transfer Bitcoin on these exchanges, which is good for Bitcoin hodlers, because that means the price is going to have to move up in order to move that Bitcoin from one hand to another, or basically retail to institutional investors. And institutional investors are getting in because obviously we saw all those Bitcoin spot ETFs coming out, but also there are companies like Vanguard, who has trillions of dollars in assets, who are now not only buying Bitcoin, but Bitcoin mining stocks, which have direct price correlation with how Bitcoin is doing, because that's their entire business. Now, this is quite an interesting chart, kind of looking back at all of the bear markets and the floors when they made, and then kind of like the price and the drawdowns in terms of that bull market. So I won't go back into all of the charts, but if we look at the green chart right here, this is the last bull and bear market. So you could see when the floor was felt for that bear market right here in 2019, we obviously had this massive rise, but during the bull market, we had drops to even 60%, and then right around here in March, and then we even had a little bit more of a drop before we actually peaked out of around 50%. So during the bull market of 2019 to 2021, we had two massive drops, really three, to 2 to 50%, and then one massive drop to 61%. Now, we're kind of seeing a massive difference. This could be just because we're very early in terms of this bull market that's happening in Bitcoin as we speak. We've only had a max drawdown so far of 18%. Obviously, as the market continues to drive up and we see more retracements or pullbacks in the bull market, we could see, further drops. But one of the reasons is because there's more demand in the markets. So we have people who see the value in Bitcoin. We have institutional investors coming in, and everyone's starting to realize how valuable Bitcoin is. And so in order for people to transfer their Bitcoin, or basically to sell it, it's going to have to be at higher prices. Now, obviously, we're still very early in this bull run, but as we look at the past bull market corrections, what we're seeing is that typically it does drop down to at least 38% corrections throughout the bull market, which we haven't seen yet. And again, we're still very early. Obviously here, 2015 to 2018, we did not see that drop, but all the other ones did drop at least that much. So it'll be interesting to see how far does Bitcoin pull back or have a bull market correction during this next bull market with these massive institutional investors getting involved. But if we take a look back at history, typically we do reach at least 38% correction in the bull market. So whenever that time comes, that's an amazing opportunity to buy the dip during that next bull market. But that's everything I have for this video. If you guys enjoyed it, if you find value in it, make sure to subscribe and like the video so you guys can continue to see content like this on a daily basis. Till the next one, we'll see you guys then.